We are talking about adjusting journal entries, or AJEs for short. When we hand these to our clients, I'm often left with some stunned expressions. In this video, I'm going to explain what AJEs are, how many you should have, and how to process them. All right, let's dive in. What are AJEs? Adjusting journal entries, or AJEs for short, are changes your accountant has made to your bookkeeping before you're preparing your corporate income tax return. During your year end, your accountant has gone through almost every account in your bookkeeping. They've looked at your bank balances that you've recorded, the equipment you've entered, and the loan payments you've logged. They've compared your bookkeeping entries to paperwork like bank statements, equipment receipts, and loan reports to see if any errors exist. If they've noticed a difference, they've made an adjusting journal entry to correct the error and ensure your bookkeeping aligns with formal documentation and is accurate. When preparing corporate tax returns, many new business owners can be stunned and sometimes overwhelmed by the amount of information their accountants ask for. I've heard complaints, moans, groans, and sighs, and I get it. Business owners, especially small business owners, are super busy. You have so much on your plate and 1,000 things going on. The information requested creates adjusting journal entries, which ensure accurate bookkeeping, lower income taxes, and that CRA standards are met so that you come out of audits unbloodied. How many AJEs should you have? AJEs make your records more reliable, allowing you to make better management decisions. It also allows you to have a more profitable business. They correct errors and provide insights into where your bookkeeping could use a little tuning up. They are a great tool to help you analyze the skill not only of your bookkeeper, but also of the information being provided by the business owner. If you are both the bookkeeper and the business owner, it's a great reflection of the work you are doing. If you have more than 5 adjusting journal entries, consider if additional training is needed for the bookkeeper, or if more communication and documentation should be prioritized by the business owner. One bookkeeper we regularly work with has exceptional bookkeeping. The information she provides is complete and has been reviewed in detail. There are very few, if any, errors, and she is super quick in her replies. Because of this, we often complete her year end within 2 or 3 weeks, and few inquiries are needed. Often, she ends up with only 4 to 6 adjusting journal entries, which makes her file wrap up super easy. Another client of ours isn't so lucky. Both an unskilled bookkeeper and a client unwilling to provide sufficient information means a very painful file. Rather than 2 to 3 weeks, their file can take 2 to 3 months to prepare. Inquiries are numerous and there are lots of emails and phone calls going back and forth, taking significant time. This client may end up with 20 or 30 adjusting journal entries, making the entire experience unpleasant, not only for us as the accountants, but for the bookkeeper and client who have to spend hours answering our questions and providing extra documentation and fixing errors. This client is one of many who ends up in this situation, unfortunately. Excessive AJEs can indicate a lack of understanding about a software program, a lack of accurate information being provided by the business owner, or a lack of bookkeeping knowledge. AJEs are the report card of your bookkeeping. More AJEs means a lower grade, and extra studying or behavior changes are needed. How to process AJEs. Once you've received your financial statement package from your accountant, you're going to want to look for 3 documents. The first is the trial balance report. The second is the adjusting journal entries report. And the third is the reclassifying journal entries report, which you may not have. Now that you've found the reports, we need to consider the date you'll use when entering your data. Ideally, you'll use your year-end date when processing your AJEs. For example, if the year-end your accountant just prepared was September 30th, 2022, you'll enter your AJEs on September 30th, 2022. Now, if this is not possible and you get a program error because your file has been rolled forward, enter the AJEs on the first day of the next year, with any income statement accounts, income or expense items, being posted to retained earnings. Using our previous example, the date to pick would be October 1st, 2022. Posting your income statement items to retained earnings mimics the process your software program goes through and is a workaround if you can't use your year-end date. Now, we can start to enter the AJEs into our bookkeeping program. Grab hold of your adjusting journal entries report and let's get started. For QuickBooks Online, AJEs should be entered through the journal entry function, with customers or clients selected when mentioned in the AJEs description. If you are using a desktop program, you'll use the general journal entry function for most entries, with the receivables or payables function used when specific customers have been identified. To help identify your AJEs, I'd recommend setting the journal entry numbers as AJE 1, AJE 2, AJE 3, and so on. Now, each bookkeeping program is going to have slightly different processes, so we created a handout to lead you through the steps of the most common brands. Check that out on our website for more information. Now, as a quick tip, enter each AJE individually rather than as one big transaction. This can make it significantly easier to find data entry errors. I have been kicking myself so many times when trying to find a trial balance error and wishing I had entered each AJE individually. When you are done, you want to check that you've entered all your AJEs correctly. To do this, you'll compare the trial balance report provided by our accountant to the trial balance available in your bookkeeping software. Now, the trial balance report is like the answer key to a test, and it's a great resource. Sometimes the reclassifying entries may cause a variance. Now, reclassifying journal entries are prepared by your accountant for financial statement disclosure purposes. They aren't always prepared and don't have to be entered into your bookkeeping software. Now, if you have reclassifying entries, you need to calculate the account balances without the reclass entries to get the right answer. At the end of your comparison, if you have an outage, double check your data entry. 90% of the time, you'll find the error there. If you are still having issues, consider if you've entered any transactions that were dated during the fiscal year into your bookkeeping software after giving your records to your accountant. This means your accountant would not have included this information into your corporate tax return because it was entered into your bookkeeping program after the official records were given to your accountant. The fix is searching for these transactions by using lookup functions or transaction date reports, and then moving these transactions forward to the next year. This is an option if your receipt is relatively small and insignificant. For example, if your year-end date is September 30th and the $50 receipt has a September 27th date, try and change this receipt date to October 1st and see if that fixes your variance. If the receipt is more than $1,000, then reach out to your accountant for further guidance. If you continue to have issues, your accountant can reconcile your bookkeeping, usually for a fee, or you can leave this variance outstanding and it will be reviewed during your next year-end services. Alright, that is all I have for today. I hope you found this video helpful and that you feel confident working with your adjusting journal entries. I will see you in another video. Bye for now.